Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Seiwan, Professor of Economics at Ewha Womans University. Professor Kim, good afternoon. Thanks for coming on.
Good afternoon, Devin.
The latest beige book from the Federal Reserve shows U.S. economic activity recovering, but still well below where it was before the pandemic. How do you think this might affect future Fed policy?
U.S. Fed's beige book reports that U.S. economy grew modestly over summer, but remained well below its pre-pandemic level. It also points out that business situations are so different across regions and industries. The report emphasizes lots of problems, particularly in both of supplies and demand of labor market. Like under pandemic, employers still lay off workers, and for workers, it became harder to go back to work because of child care problems. So because of this very difficult and chaotic situation in U.S. Labor market, U.S. Fed will continue its expansionary monetary policy longer than expected.
Despite all that, U.S. stocks were strongly higher last night. New highs yet again for the Nasdaq and the S&P, seemingly on hopes for a vaccine. What's the story in the global markets?
Broad rally in U.S. Stocks lifted the Dow Jones Industrial, Nasdaq, and S&P 500 to new records. Stocks have soared from the collapse of in March with support from Fed's interest cuts and increasing hope for vaccine development in the near future. Dow Jones Industrial gained 1.6%, and Nasdaq also gained 1% on Wednesday.
And today on the KOSPI as well, a lot of buying by foreign investors in particular. The index has performed about as well as U.S. stocks the day before. Tell us about the local markets.
Right. U.S. markets, strong momentum yesterday is reflected in domestic market today. Particularly foreign investors, as you said, bought large amount of domestic stocks in KOSPI, which is the opposite trading compared to previous pattern. Finally, KOSPI had 1.3% return, and KOSDAQ has had a 0.9% return for today.
And we see oil prices down quite a bit now today with less demand from the U.S., lowest price in almost a month. Gold prices, though, still pretty close to their recent high. What's your outlook for oil and gold?
International oil price represented by Western Texas Intermediate dropped by 1.3% in a single day, down to $41.5 per barrel. As U.S. economy is slowly activating from shutdowns and lockdowns, there was decrease in gas demand from the United States. Since for months, global economy is recovering, and at the same time, there is still concerns on second pandemic. It is expected that both of oil price and gold price would be steady for months.
And Professor, zooming out a bit here, this week data show that if Korea's population continues to shrink like it has been doing, then 40 years from now, the country's debt will take up more than 80% of its GDP. What do you make of that estimate, and what can be done to shore up Korea's fiscal situation?
I would say that the real threat to Korean economy in the long run is population decrease rather than coronavirus pandemic of today. It affects all fundamentals of Korean economy like production, employment, government debt, and so on. According to recent government estimation, government debt will be increasing up to 81% of GDP until 2060 because number of economically active workers decreases fast. Then the government should be spending more money on supporting not working people like full-time retirees without increase of the tax revenues. So finally, government's fiscal health will be quickly worsened. So more careful fiscal expense management is strongly suggested, along with better planning on tackle low birth rate.
It is a major challenge, to be sure, Professor. Thanks so much for sharing your insights today. We appreciate it.
Thank you very much.